Tesla stock is down, what, 10, 11% since their Q2 earnings, since yesterday. And it's just so silly. This crash is just so silly. And it's just panic selling. It's ridiculous. And you know why? You know why it's going down? It's because of this. The auto margins are apparently hitting an all-time low since October or since 2019 in general. We're in 2024. We're still talking about auto margins, vehicle margins for Tesla. It's like as if people are still putting Tesla as a car company. Oh wait, that's exactly what's going on. That's the problem. Vehicle margins are down. That means Tesla stock has to go down. It's not valued. Tesla's just a car company. But they missed one of the biggest things. Look at energy. Look at it. $740 million in energy profits. Tesla reported for net income 1.6 or 1.5 billion. That's nearly 50%. 50% of the entire quarter of Tesla's net income, the profits did not even come from vehicles. In fact, it came from a sector that's growing apparently 158% quarter over quarter or year over year. And yet people are just, crazy about vehicle margins. It's just crazy to me. The fact that people are panic selling because of this. It's ridiculous. Now, yes, yet in earnings call, it was downbeat. It wasn't upbeat, and we can get to that in a bit. But the crash is just silly. 11% is an overreaction drop. It is, right? When earnings came, they did miss, but we'll talk about that as well. They didn't really miss, but bottom line, they did miss. That brought the stock down, like 4%. Then the earnings call brought it down to the negative 11% because the tone was bad. It's silly. It's silly, but let's just get down to it. Smash that like button, hit subscribe if you guys haven't already. We're going to dive down or just dive deep into it and try to make it as simple and easy for you guys to read. I'm not going to go through the whole thing, just the key points, because I read through it, the whole report, and I'm just like, this was a solid quarter. This was absolutely a solid quarter. So we know right out of the bat, auto margins was the reason why the stock went down. Everyone was just like, oh my God, 14.65% down. Tesla's auto, they're not making money on their vehicles. They're just another car company. There's no difference between them and Toyota, all that kind of stuff. Idiots. Then we got the energy soaring up like this, and people are ignoring it left and right. It's crazy. What's even more crazier is that they added nearly 4 billion in their cash position. They have over 30 billion in cash. Just last quarter, they were negative cash flow. This quarter, they're up 4 billion. 30.7 billion in cash right now in one quarter. Incredible. No debt and a whole bunch of cash. And it's just growing. It's incredible what they have. I did not expect them to have this high of a cash flow in Q2, which is insane. But to break it down nicely, shout out to AJ for listing it out in order, because this is pretty much my thoughts. Now, before I get into this list, I do have to make something clear. Bottom line, they did miss. But if they didn't have that one-time investing restructuring for that AI infrastructure, it would have been a beat as high as 69 cents or 66 cents, whatever it is. And, AJ puts it in his list right here. Let's go down to it. He says, bottom line, this was a strong quarter for Tesla with the company improving across all key performances indicators. Facts. Number one, Tesla delivered all-time high total revenue of 25.5 billion despite a 300 billion year-over-year FX headwind. And again, this is for the currency changing from the yuan to the US dollar. And you guys know US dollar is pretty strong right now because interest rates are high. So, and again, it's hard to predict what the FX currency is going to be, right? It really is hard to, when you're trying to estimate the revenue and profits of the company, it's hard to even add this in because you don't know. You could estimate it, but it's not going to be accurate, right? So that was one that shaved off 300 million from it. Second, significant total gross profits of 4.6 billion provides for significant fixed cost absorption. Number three, total gross margins improved to 18% from 17.4%. If you guys been following me, you guys know that my total GAAP gross margin was 18%. I did estimate it that it's going to be 18%. And guess what happened? We got 18%. But the rest of the things I didn't really get on point, right? But we'll see why. This was important because if that one-time AI restructure or infrastructure did not get added in this quarter, I think I would have been very close with my estimate. Pretty darn close. Number four, operating margin improved to 6.3% from 5.5%. It would have been over 7% if we didn't have that $600 million in AI infrastructure capex. And he talks about it in the next line right here. Number 5, EPS of 52 cents per share after a one-time restructuring charges and 66 per share before, implying plus 15% and plus 46% quarter over quarter EPS growth. That's what I mean. If you guys were watching my live session yesterday, and shout out to The Rock, again, if you're watching this, man, let me know. I gotta tag you because I don't know how I missed that. If this 600 million was not removed from the net income, Tesla would have 66 cents in EPS, beating expectations, beating estimates of 62 cents by 4 cents. And here's the thing, you guys have to read between the lines. You guys can't just say, oh, they missed, that's it, they missed. No, they had to. They wanted to have this 600 million investment because the sooner they do investments, the sooner they're going to reap it. And they need to make this AI infrastructure to get the FSD and the bot and the other things that they need to do, clusters, up to speed. And Tesla doesn't care about quarterly things. Here's the thing, you got to look long-term with this company. They don't care about this quarter stuff, right? So to me, in my eyes, this quarter was a beat. This was a beat. They just had to use 600 billion to invest in the AI infrastructure. They got to do what they got to do. In my eyes, this was a solid quarter. Number 6, positive free cash flow of 1.3 billion despite 2.3 billion capex spending without 600 million AI infrastructure. I mean, it's just investments. I mean, that's how a company grows. Think Amazon 10 years ago. They just kept reinvesting. Even now, they keep reinvesting back into the company. Look how big this company is. And here's the thing with Amazon. If they just relieve 1% of investment, that adds on tens of billions of dollars in profits for Amazon. It's a really good company. Very good stock. Number 7, cash reserves reach an all-time high of 30.7 billion. We went over this earlier. And number 8, Tesla's total implied vehicle sales, TVS, reach an all-time high of over 500,000 units. See slide 19 for details. So shout out to AJ. I mean, he made a massive thread. I recommend you guys to take a look. It's a really good deep dive of what happened in Q2. Really good guy to follow on X. But some of the things that you guys should take into consideration as well in this Q2 is, well, something that I did not like was the average selling price dropping. Now, I did tweet this, but numbers were a little off, but here are the correct numbers. Average selling price dropped down to 41,738. I expect that to increase because of Cybertruck, but that went down. So I was not too happy about that, but hey, it is what it is for now. The COGS, though, went below 36,000 for the first time, finally to 35,954 per vehicle. So that was really good. So a positive and a negative there. Now, what the important thing that I got from this Q2 earnings is that 2025 is going to be an epic year. Check this out. I listed it out here on my X. If you guys aren't following my X, I don't know what you guys are doing. But here are some interesting points that you guys should know. So Tesla added 3.6 billion in cash. We know this. I mean, this is a very big deal. Number 2, vehicle production to increase in Q3. And we're seeing this in Shanghai right now. Every 30 seconds, there's a Model Y coming off the lot. So they're going crazy with production. So Q3, we're going to see an increase in production. Those who care about the vehicles, they're going like, this is bullish. This is good, right? 3, semi is start production in the end of 2025. Lithium refinery to start in 2025. Megapack Shanghai to start in Q1 of 2025. And the last point that I forgot to mention here is that next-gen vehicles to be produced in 2025. Guys, 2025 is looking like an awesome year for Tesla. It's looking crazy good. And you know what? Let the stock go lower. I would like to buy more. Because I think in a year from now, we're going to look at Tesla and go like, okay, maybe, that massive drop that we had in Q2, if anyone's going to even remember it, was probably an opportunity to buy more. Not financial advice, but the way how things are going, it looks like 2025 is going to be flipping crazy. Some other interesting news that Elon did mention is that Robotaxi event is confirmed for August 10th. Oh, sorry, October 10th, not August 10th, 10/10. So that is a sheesh moment. Gonna look forward to that. Elon confirms to have several thousands of Optimus bots working in Tesla's factory by end of next year. I didn't see that one coming. I was expecting 1,000 or 2,000, but he's saying several thousands. That's going to be interesting to flip and see. He also said that Optimus bots will go in production in 2026. Now, again, this is Elon's guess, but if that's true, I mean, that's going to be crazy. What else is crazy is that Elon said that Tesla is demand constrained, not production constrained, demand constrained. So the Shanghai Megapack factory, when that comes online, is going to triple output. So what we saw today or yesterday with energy is just the beginning. And I am expecting them to, announce a third location by end of this year. Sheesh. That's exactly what it is. Talking about the Roadster, he said it'll be coming out sometime next year. So they pushed it out another year. I guess they're working more on the robotaxi because that's more important. Elon says that Tesla's unsupervised FSD will potentially be ready by end of this year, no later than next year. I kind of do believe him this time, because if you guys are looking what's going on with FSD 12.5 and all that kind of stuff, hey man, it's looking crazy good. It's looking absolutely good. Another crazy thing that he said, Tesla needs to compete with NVIDIA with Dojo. So now I think I am rephrasing this. I think he meant it's required or something like that. I have to double check that again. But he said that he needs to have Dojo working, because he said NVIDIA can increase prices and anyone will pay for it because it's the best GPUs. And so Elon wants Dojo to work. And I think he's going to, when Elon doubles down on something, it's going to double down on it. One thing that I didn't like, a couple things I didn't like, is that he said that Giga Mexico has been on pause until the US election. Now, that was a shock to me, that I thought it was going to start, but they say it's on a pause because of political reasons, not because of next-gen reasons, right? He said that if Trump gets elected, there's going to be tariffs and taxes on Mexico, that it may not be the best idea to even build in Giga Mexico. So that was a bit of a shocker to me. I'm like, okay. But Turbotaxi and the next-gen stuff is going to be produced in Giga Mexico, Giga Texas, not Mexico, Giga Texas. It's a huge 810 hectares of land. Elon did sound very exhausted in this call, which really was a downbeat tone to it. And I think that's why the stock also went down. He wasn't too optimistic, unlike Q1. Q1, he was fiery. That was a little bit interesting to see. But the guy works like 24/7, so you gotta give him some slack a little bit. Some other big news that came out is that Elon says Tesla's FSD supervised will get regulatory approval outside of the US, countries like China, etc., by end of the year. For China, I believe that, but I'm not too sure about other countries. Maybe Canada. So we'll see about that. But I do see this happening because we see a lot of movement going around with China and Baidu and Tesla in China. So I do see this happening very, very soon. Now, to sum it all up with the positives and negatives, Gary Black did a good job listing this out. So shout out to him. Upside, he says, EV adoption up 20-25% per year. This is nothing to compare to what's to come, but nonetheless, that's good. Second, EPS estimate trend likely to bottom in Q4. Personally, I do think EPS has bottomed. I do think the Q3 and Q4 are going to be better quarters, hence why Q1 was the bottom. But I think he's talking about as a fiscal year, which does make sense. Number 3, Fed starts cutting interest rates in 2024. Today, Canada just cut another 2.5%. Interest rates getting cut is bullish for Tesla, and I talked about this so many times on this channel, so you guys already know. Number 4, higher FSD take rates, licensing deals. Now, yes, FSD take rates, we haven't seen what the percentage is, but we do know this is increasing. Number 5, 25,000, 30,000 compact car launch in 2025. Number 6, energy profits could 10x by 2030. I think probably a bit more than that. Like a 10x will be like what? If it's 740 million profits right now annualized, that's about 3 billion in a year. So he's talking about 30 billion by 2030. Okay, maybe. That sounds a bit right. If there's not enough Megapack factories, true. That sounds realistic. I'm not going to lie. Number 7, likely first to market with unsupervised generalized robotaxi full year of 2012. What do you mean likely, Gary Black? It's a given. Who else has this? A generalized robotaxi that doesn't use LiDAR. So I think this is not a likely, it's a certainty. Number 8, optimized production begins in 2026. Now, yeah, that was a big shocker to me. I'm like, whoa, this is coming faster than I thought. Downside, number 1, he says that Judge McCrupt may not ratify comp plan. Delaware Supreme Court timing uncertain. Again, we talked about this, Elon has checkmated this judge. Whether she approves it, ratifies it or not, this, it's already been moved to Texas. So, it's just going to really hurt Delaware court. I don't know why it's taking this long. You guys can check the video here how Elon checkmated this. And Tesla shareholders, if you're a Tesla shareholder and you voted for the comp plan, you're a legend. But you guys can check the video here how we checkmated her. And it doesn't matter right now, even if she ratifies it or not. So I don't think this is even a downside. Number 2, auto gross margins, ex credits may not have bottomed. Yeah, credits was almost 900 million. Which was like, whoa, that was crazy. That was insane. Number 3, Tesla at the highest PE in 2 years. Again, this PE stuff, yeah, I use it a lot to, dictate what the stock would be. But usually when a PE is high like this, is because there's something good to come in the next coming years. Look at NVIDIA, look at Amazon, all these guys, when they had like hundreds in the PEs, just, a year or two ago, right? So that doesn't really matter. It's just, future cash flows, all that kind of stuff. Number 4, regulatory risk on FSD and autonomy. When you have proof of concept already, right? With Waymo and all that kind of stuff, what regulatory risks are you thinking? But I do see what he means here by that. He's saying 6 to 12 months, price target of 270. I'm still sticking by my 350 by end of the year. I ain't changing that. All in all, guys, I summed it up in one post what this earnings call was and what's going on right now with this stock right here in this post right here with Jackie Jan. So Tesla added nearly $4 billion in cash in their cash position of now over $30 billion, and their energy is set to 10x while FSD and robotaxi are on the verge of becoming a reality, and everyone cares about vehicle margins being down? What? And the stock is down 10, 11%. What? This doesn't make any sense. The panic is just stupid. They wanted the actual bottom line to be a beat, which if you look between the lines, it was a beat. I don't know. This is just hilarious. I am looking forward to buy more shares. I don't know about you guys, but I was hoping to save more money so I could buy more. But nonetheless, these opportunities come and go. And so the opportunity is coming. And I'm gonna get ready to buy once again, I guess. But let's see what happens. Let's see what happens. If it goes even more lower, I'll probably consider buying even more. But maybe I'll buy 1 or 2 shares here and there, and then we can continue the dollar cost average heavily when it goes to the low 200s or even high 100s. Which I don't know. At this time, it's hard to see that happening. Now that we know that Q3 is gonna be a better quarter than Q2, it's hard to see that happen, right? But comment down below, what do you guys think this quarter was? I mean, again, the crash is just silly. It's just absolutely silly and just completely stupid. Everyone seems to be on a panic mode. They're fearful now. I get greedy. We should get greedy when people are fearful. Not financial advice, but that's what I'm saying. I'm just getting excited. But anyways, guys, let me know. Comment down below, what do you guys think? And my brother was an EV doubter. He was a doubter. And for the first time ever, he sat in an EV, and I rented a Model S for him to sit. And, well, you guys got to watch what happened here, because his point of view pretty much is what someone who doesn't believe in EVs' point of view is, what he thinks. And it's pretty interesting. It's pretty entertaining as well. So check it out. Y'all won't be disappointed, guys. Get your I Bought the Dip t-shirt or your dollar cost averaging t-shirt. Use the discount code RIPSHORTS to get 10% off. Subscribe, and I shall see you guys in the next video. See ya.